Good morning, everyone. Welcome to the European crossover webinar. Boy, that was a fast 2 or 3 minutes. I didn't realize it was already time to start the webinar. So sorry about that. But we are seeing the dollar on the bid here. You can see the cash dollar index hit at par 24. We did see the indices finally take a dip. They put up a pretty good fight during yesterday's session. We finally broke one, and then of course with crude just going completely negative, that sent things lower. We saw a bounce, but then we started to see that fade back, and then there was that news regarding Kim Jong-un, and seemed to go and take risk off, and we'll go on and move into that area. We actually hit the 78% in the SPOOs that was in Asia, and I posted that in the chat room as well as the chart here. You can see the dip here down here to the 78% of the low from right here on April 16th, or actually technically it would have been April 15th, but late in the China Asian session. You can see down here, and then pretty much close to it right here in the NAS. So we're going to get rid of those two. So we'll see whether or not we'll start to break down. You can see right here also. This is rather interesting also. And here with the Russell, I haven't really taken a look at the Russell in a while. Did the other day when somebody was mentioning, I forgot who it was, and I think at the time it was coming apart or something like that. Also take a look at crude oil here. You can see here, we're just about to take out $20 in the June crude. And you can see that's continued to fall. We'll get a little bit closer look here on the daily. You can see yesterday it really dropped. Obviously, the key thing was on May, when May went actually negative. You can see here and something else. So a pretty good fall as it's done. You can see it trying to move a little bit off that $20 level. Golden turn is also weakened here. And you can see here on the SPOOs, we're kind of coming back here. We did make it down here to about 12, let me see, 2784-ish, I guess. We came down here, you know, like I said, in the Asian session when we took that dip down here. I was able to pick it up at that, in this area. Actually got out of it a little bit too quick because we actually looked at, we made it all the way back up to almost 2,800. Kind of moved back and forth before we got up here testing VWAP, and then we rolled back. So with that, we'll go on and move into, oh yeah, tell you what, economic data. So we do have German zoo numbers will be out at the top of this hour. Reuters poll is for a net. Wow, holy smokes. A negative 42.3. Holy smokes. And current conditions is expected to be negative 77.5. Yikes. We do have New Zealand dairy prices later on this morning, as well as Canadian retail sales. And in the US, we do have existing home sales at 10 a.m. Eastern. We did have UK data, employment data earlier. And we'll move into the news. So the Australian and New Zealand dollars jolted by jobs data and geopolitical jitters. The Australian and New Zealand dollars lost ground on Tuesday as dire data at home underlined the economic toll of fighting the coronavirus, while a flare-up in concerns about North Korea hurt risk sentiment across Asia. The Aussie slipped to 62.95 away from a 63.90 top on Monday. It now has support at 62.64 with major resistance at last week's peak of 64.45. The Kiwi lost 9 tenths to 59.80, leaving behind a top at 60.60. Part of the pullback came when markets were spooked by reports North Korean leader Kim Jong-un was ill after undergoing a cardiovascular procedure earlier this month. South Korea's Yonhap News later cited government officials saying Kim was not seriously ill. The risk of political instability in the rogue nation sent the South Korea won sliding and lifted the U.S. dollar while unsettling stocks across the region. In Australia, the damage done by the coronavirus lockdown was all too clear as the Bureau of Statistics reported that 6% of all jobs in the country were lost in a brief period between March 14th and April 4th. That would equate to a huge 780,000 jobs out of a workforce of 13 million. Rising unemployment will hit consumer spending, home prices, and wage growth, said Diana Musina, senior economist at AMP Capital. Inflation will also be lower than expected. We expect underlying inflation to be around 1% by the end of the year. At least policymakers are willing to do whatever is necessary to keep the economy from spiraling into depression. The Reserve Bank of Australia has already cut rates to a quarter basis point, targeting a similar level for 3-year bonds by buying government debt in the market. Minutes of the bank's April meeting on Tuesday showed it feared economic output would shrink markedly this quarter and remain subdued through the third quarter as well. RBA Governor Philip Lowe is due to speak on the economic outlook and answers questions later on Tuesday. The bond market is keen to hear more details on the bank's bond buying intentions, given it has scaled back purchases sharply in the last couple of weeks, even as the government has massively ramped up its borrowing. And the dollar gains as oil crash in North Korea saps risk sentiment. The dollar resumed its climb against currencies of oil producers on Tuesday as investors remained skittish after a historic plunge in U.S. crude futures below zero and shied away from the risk even as the benchmark bounced back. Concerns about the health of North Korea leader Kim Jong-un followed media reports that he was receiving treatment after undergoing a cardiovascular procedure also supported the dollar. The U.S. crude oil futures plunged into negative territory for the first time on Monday, dragged by a supply glut and sagging demand due to the coronavirus crisis that they managed to scrape back into positive territory early Tuesday. Oil is off its lows, but a lot of companies are going to get hit and companies could start to fall, said Shane Oliver, head of investment strategy and economist AMP. If shares prices have a pullback, the dollar could see some gains as a safe haven. The only thing that's capping the dollar is that the Federal Reserve has done more quantitative easing than anyone else. The factory closures and travel curbs enforced to slow the pace of new infections have triggered a collapse in oil prices, which is drawing money from commodity currencies and other risk assets to the safety of the dollar-denominated assets. Against the Norwegian crown, the dollar rose to 10.4722 and traded 24.10 against the Mexican peso, following a jump the previous day. The U.S. currency pulled up 0.2 to 75.75 Russian rubles and also stayed against the Canadian dollar at 41.62 after hitting a two-week high on Monday. The South Korean won was one of the biggest losers, tumbling added to against the dollar after CNN reported that North Korean Kim was in grave danger after the surgery. However, sources in the South Korean government and Chinese Communist Party refuted the media reports. U.S. West Texas Intermediate crude for May delivery turned positive and traded at just below $2 per barrel in Asia. The May contract expires on Tuesday. The more actively traded June was up 4.9% at 21.43. Well, it's actually trading at $20.15 now, barely just above 20 bucks. Investors have been unwinding long positions in front-month futures because U.S. storage facilities are near at capacity. Energy prices are also falling because output cuts agreed last week by major oil producers have not offset a collapse in demand caused by the pandemic. The dollar rose to 97.02 Swiss franc. The dollar steadied at 07.47 yen, and the euro eased to 8.41 against the pound. The common currency was changed at 87.38. Asian equities followed Wall Street lower, with the broader index of Asian Pacific shares outside of Japan. Data due later on Tuesday is expected to show German investor sentiment remained weak in April because of the pandemic. European Union officials will discuss on Thursday the bloc's response to the coronavirus impact, coronavirus-induced economic chaos. Members of the EU are struggling to reach a consensus on how to financially support countries hardest hit by the virus, such as Italy and Spain. If the EU fails to reach an agreement this week, there could be more downside risk for the euro, some analysts say, as coronavirus infections show tentative signs of peaking in some places. Countries are struggling to decide how to reopen their economies for business. New Zealand dollar fell to 59.98, and short-term investors quickly booked profits on the Kiwis' gains on Monday after the country decided to next week ease some of the world's strictest lockdowns taken to stop the spread of the infections. We'll go and move into the data. So the euro stayed in a relatively tight range on Monday, unable to get past bias chart resistance at 9.11, nor come close to the bias chart support 8.14. Both will remain intact for Tuesday. So our bias chart support was at 8.14. The low this morning is 8.21. So that's going to essentially remain the same here. We can break lower. The only difference is we'll probably move the resistance to right there. You see the close on that day, which will be 871. Now, like I said, I've said in the past, it doesn't mean that it's going to stop right there. It just means that that's where the demand's going to be. If we're going to trigger, we're still holding that 814 low for the day so far as 820. So it just means that that's where there's going to be a bit of a fight. And if it triggers, and boom, that's where, but that's the area of interest. So 814, 871, we have lowered the resistance. I'm moving to the cable. And it was pretty tight session yesterday, as across through most of all the pairs. So cable paired back slightly in a tight range. Support on Tuesday will be 23.42 with resistance at 25.03. Just like the euro, it'll be right here, the close from Friday. So right there, it's going to be 24.90 now for resistance. And as I said, while we're in this environment, it's really about just the levels. And, and some of the analysis we would have pre this coronavirus or where the volatility really got wild, we'd be referencing, okay, well, if the employment is this, and we'll be doing all these notes. Right now, although my focus has been on SPOOs, but some of the levels that we've mentioned in the bias chart have been like close to basically spot on. But it's because all I'm looking at is levels. That's it. I'm not focusing on news and um, things like that. Just like wherever the market moves, and I think some people have struggled because they're trying to. I mean, at the beginning of the show, we like to, as I mentioned, we'll cover the news because that sets or can set the tone for the day, and I think that's important. So that's why we'll cover. We'll only cover a couple of stories. Sometimes we'll do three, but we're just looking for what's going to set the tone for the day. But outside of that, I'm just sticking just to levels. That's it. Nothing more. That's why sometimes we can kind of fly through this analysis, but that's been what seems to be working. I haven't really traded currencies. I've stayed with the SPOOs, but sometimes I think back and I look at some of these levels. I'm like, holy smokes! If I just got, I should just be trying to, mess around with the currencies at the same time along with the SPOOs. But that's it. We're just going by the levels because the moves have been. I mean, we've slowed down a bit, but they were so dramatic that basically that's all the market is going by. It's just the levels and the stops there and whether they hold or not. So once again, like I said, I just want to reiterate on that is that I think some people may have struggled because they're trying to see a lot of things into these markets. And I think if you just go by the levels, straight up the levels, you do far better. I like to incorporate, even when I'm trading the SPOOs, I do like to incorporate what may be the theme, but what I do is I actually look at the levels and then I try and apply if the theme is going to allow us to push to that level. So I don't know if that's going to help, but that's one of the reasons why you'll see these analysis, the little recap thing is very, very short. It doesn't reference anything where, oh, we've got this report coming out. The ECB is going to be doing this, and the perception is this or that, and that's why I think we can move to this. No, it's just about the levels. That's it. That's all I'm focused on. Nothing more. So with that, let's go and move into the Aussie dollar. So they also challenged and pared back from the 64 even. Support remains 63.03. And you can see here we just got, there's a 63.03. And actually, yesterday we had our resistance at 64.09. I think the market had just topped already, but you can see right here, look at this. I mean, you can't get any simpler than that. Look at that 63.97, 63.03. And the low today has been 62.84. So that's what I'm saying. You just keep it simple and say, where can it break? So once again, where are we at right now? Just like we did with the euro and the cable, they're all looking like the resistance is going to be, at least for today, is going to be Friday's close. So it's going to be 63.58. And where can we try and trigger a little bit further move? Well, it's still holding the 63.03. It's actually right there, essentially. But can we press a little bit lower? Well, it's just going to be the low right there. That will trip some stops, considering that, see, the market's already rallied above. We fell back. We rallied. We've run out of gas at 64. So it's the low here that's going to trigger the stops. So you need to hold that right before them. But that's what's going to trigger stops. So it's going to be 62.61. So the Kiwi challenged and slid back against the bias chart resistance level of 60.89, which I think it actually came. I think it missed it by 1 pip. Yeah, you see that the high was, you see 60.89. I think it made it to 60.90. So that's what I'm saying is all I'm doing is just going with these levels. That's it. I'm not even paying attention to the news. I mean, I see the news, but I'm not even paying attention to the news. I'm just looking at the levels. So it slid back against the bias chart resistance of 60.89. Support will be 59.70. So far today, the low has been 59.74. So, and you can see right here, we put for 59.70, but it actually should be this opening here, right there, which would be 59.62. So support will go for 59.62. Resistance will be the close right there. $60.32. Call it $60.33. So the dollar CAD closed above 41. Open the door for a test of 42 even. Well, boom, we're there. Which will be resistance. Support will be 40.24. So we're going to stick with that, 42. So there we go. And once again, you see how they're just moving from target to target. So it's 42. Could push a little bit. Well, I think it may have gotten a couple of pips, a few pips above it, but that's resistance. And for support, there. You see the close there, which confluences here with this high, 41.12. And actually worked out to be that low. So it'll be 41.12. Let's move into the peso. So the dollar peso closed at 24. Resistance will be 24.21 with resistance at 23.60. Well, the high today has been 24.22 and a half. Well, not bad. Off by 1.5. But you can see where we're coming up with that. Like you can see where the resistance. You see the close here, confluences with this close here and this open. You see right there. So we're just going after it. Doesn't mean they can't go above it, but that's it. So it's actually it hit it perfectly. You see that? It actually should be 24, 22 and a half. Let's call it 24, 23. And support's going to be 23.60. Let's go move on to the dollar yen. Well, I didn't see any changes here, so I kept this the same. So 715, 828. The only difference is we can probably lower this a little bit, and it's going to be the close, just like we did the other ones, right to that close, which is 792. And the dollar index was the same way, although it's on the bid right now. The dollar index was, we'll have to adjust that. I had par 45. Well, I guess it's going to stay the same because look, right now the high's par 28. So same here. Par 45. The only difference is we'll adjust the support, which we can go with. You see the high right here? That is right there, which would be 99.62. So we'll just move it up a bit. And move into the cross rates. And you can see here we had a very nice gravestone doji here in the QEN. At the time, yesterday we counted there, we were just right there at the moving average, just pressing against it. So we pushed just a hair bit higher. We've turned around and you can see here we've taken out support right there. So it really opens the door. And of course, with the gravestone doji, you're going to see it pare back. Matter of what you'd be looking for is how far can we pare back. Well, we've already rallied up high here. This is kind of similar to what we saw in the Aussie. We rally up to these new highs, we challenge, and it's open or susceptible then to failure, because if we break lower here, it opens the door, and certainly they press these lows here, which is at 63.34. So how much further? Well, we're going to look right now at the close here, which almost coincides with this open. So we'll say that's going to be support, which actually comes in to the low from that prior day, which is going to be 63.78. And obviously they've got them on the defensive, so any rallies back, they're going to fade into. I'll tell you what. You see this low here, which is 64.72, and this high is 64.58. Let's go right there. There's a confluence off of this low too. So 64.63 resistance. Let's go to the euro yen. Well, we've continued to press lower here in the euro yen. We actually had 16.55 for support for yesterday. You can see we're still pressing lower here. And we're pretty oversold. I mean, we're going to press it just a little bit lower to right there. You see the low on that? Let's call it 16.12. And we're just looking for some confluence here. It's going to be 16.73. And let's go and move on to the euro line. Well, we continue to hold the 70 even here. And we even had that yesterday as our low. We may have been off of it at the time, but 70.02. But we have come off of those lows. So let's go and get onto the 2-hour chart to see if we can find something a little bit closer. And we're just looking for confluence. They are pulling away from it. Right there. You can see the best confluence coming across the board. You see here, here, here. You see there? That's going to be support, which is going to be 71.20. You can actually even move it up even to right there. 71.28. Of course, we know the Aussies are a little on the weak side. So how much further can they push this? Let's take a look. Some good resistance for right now, 71.96. But they can potentially get it up to here, 72.52. I'll give an area to go for. To the Euro Kiwi. This may be similar, so let's move on to the 2-hour chart. Yeah, we're rebounded also here. So support is going to be right there. You see there here? Coming right underneath there. It's going to be 80.08. 80.08. And where can they move to? Not bad right there on this run here, 81.44. But it's not a bad area here if someone's allowed to take a little bit off there, 81.40. But potentially they can make it right here, which is 82.09. Let's move into the LCM. So we have gone and paired back, and you can see here we've just made it right to this level. We're going to just stick with the levels right there. So that level is 67.41. And resistance, we'll go into the 2-hour chart. $68.08. We'll move into the guppy. Bit of a rounding, almost a good rounded top, but then we kind of hung around here. We're coming into some volume right in here. Right there. See off of here. Let's go with that 32.80. with resistance coming in right there at 33.62. And let's go with sterling odd. Support's going to be right here. 95.93. Resistance right there. See that coming across? Potentially, I don't know if it's going to get there too easily, but potentially it can get up to 97.87. I don't really trust it the way cable's been, so let's just go right there, which is 97.39. And there's the bias chart. We'll go and take a look at equities. I guess the key thing to focus on looking now is going to be here on the daily. You see that? And remember this last week, that 28.54 was huge. Remember on Thursday, and we took off. And oh, wow. Crude at 19.16. So we've dropped $1. Remember, we were at 2015, we were saying we're just hovering just above $20. We're now at 19.15, now 19.27. That's certainly going to continue to weigh. Certainly 28.20 is going to be key here. So if you're short, as long as you stay below 28.20 on a 2-hour chart, should be fine. Moving on to crude. You can see here, look at that, we're pressing even lower, 19.25. Look at that. And gold continues to remain a bit weak here. VWAP on gold currently right now is 1709. And boy, look at VWAP on crude, way up here. But that'll conclude it. And thanks for joining us here on the European Crossover webinar. I'll go and get the bias chart posted, and we'll see you in the chat room.